Practical accounting, the better way to learn.
This next one is critical. We've shown you a better way to learn, the better way to learn. But these white tabs convert all on one page using the differences between the intuitive way we do it and your homework software, which I'm not going to comment on.
More. Just keep it going. How do we do this for homework?
We're using the practical T as we just showed you. Okay, so we have the practical T set up here. We have assets, which are cash, inventory, and accounts receivable. Dividends and expenses, revenues, contributed capital, and one liability account called accounts payable. The practical T would put, if we buy inventory for 10, it would add to inventory and add to accounts payable. If we pay a partial bill of $5, our cash would go down by 5, and accounts payable would go down by 5. If we sell at price and give a bill, our accounts receivable would go up by 20, and our revenue as a source of funding would go up by 20. And if we collect, it's a partial bill, our cash goes up by 15, and accounts receivable goes down by 15. Now, there's two things here. The first one is traditional journal entries. Traditional journal entries are a manual bookkeeping form and format that hasn't changed since the monk invented it.
Oh my gosh.
Oh my gosh. So inventory. Well, first, the debit is always listed first, and the credit is always listed second. And of course, you have a date and a reference number and a description. But it is inventory, debit, because it's an asset going up of 10, accounts payable, credit of 10, because it's on this side. When this side goes up, it's a credit. It's as we had said back here.
I think one of the things you should remember as we go through this segment is that a transaction impacts at least 2 accounts. And that's what we're illustrating here. And how you figure this out is part of what the base method and the T tells you.
So remember, folks, this is still an equation. So you can add to both sides, add to this side and add to this side, and it's in balance if it's equal amounts. You can subtract from both sides and it's still equal amounts, or you can have an add and a subtract on any side and it's still in balance, either side. So this is still an equation, so you need to keep it in balance. Okay, the accounts payable is a debit because it's a liability going down, and cash going down because it's on this side. When this side goes down, an asset goes down, it is a credit. Accounts receivable, 20 is revenue, is a, oh, no, not revenue. Accounts receivable is going up. It's an asset. So that's your debit. Revenue is your credit of 20. And the last one is collect. Your cash is going up. So that is your debit listed first, and accounts receivable going second. I just want to tell you, if you didn't do this up here, the only way you can really do this without running it through this format is rote memorization, folks. So always run it through the practical T, and then your debits and credits will fall right out. In addition, you'll have your pluses and minuses and really understand what you're doing. The next one, oh, control page down, next page is the same 4 transactions, only now we've entered a beginning balance and ending balance with the base method. And here we're going to show another way that you're going to see, this is a traditional key accounts. Debits are always, always, always on the left, just like the practical T. Credits are always, always, always on the right. But now we're going to do it by account. So cash is a asset. Its beginning balance is a debit. It has one transaction that adds for 15, that's your collect. One that subtracts, and that's a credit. So the way you do this is 17 plus 15 is 32, minus 5 is 27, which is the same way that you get it from the practical approach. Inventory works the same way. Accounts receivable works the same way. Revenue, however, it's normal for these to be a credit balance. So you're going to see this plus revenue of 20 equals 20. You might not be getting this by the time you're reading this or viewing this, but hang on and come back to it. Common stock is on the credit side as well because of the source of funding. This is contributed capital. And accounts payable, it starts out with a beginning balance of 12 plus 10 when we sell. Oh, no, I'm sorry. Plus 10 when we buy some more inventory. Minus 5 when we pay a bill. Ending balance is 17. So we're probably, like I said, a little ahead of you, but this is going to become very useful. And if you are working the practical T, this is how you convert it to enter it into that sometimes confusing accounting homework software.
You can get this Excel workbook and a whole lot more
Stuff for free at practicalaccounting.com.
See you there.